We'll go ahead and start the webcast. My name's Teresa Francis. I'm with First Choice Advisors, and I want to thank everyone for attending today. John Francis, the senior partner here at First Choice Advisors, will be doing the webcast today. He has extensive experience with nonprofits since the early 80s when he was budget director at the United Way for Greater St. Louis, and has worked with MIP for about as long. He was one of the original partners with MIP back in Austin back in the 80s. So if anyone has questions during the presentation, if you will, put them in the chat, and we'll get to those as soon as there's a break or at the end. Can everyone hear me okay? If you can't, let me know. And with that, I will turn it over to John.
Well, terrific. Thank you. Can you hear me okay?
Yes, I can.
All right. Well, great. Well, good afternoon, everyone, or good morning, depending on where you are. I am John Francis, and as Teresa mentioned, I've been in the nonprofit world for 30 years now. It occurs to me. I started at United Way of Greater St. Louis in 1986, and doing the math, that is indeed 30 years ago, as hard as that is to believe. I worked in a variety of capacities with St. Louis University and other organizations before joining what at that time was a consulting, nonprofit-specific consulting practice in St. Louis, and have been working with MIP, Abila MIP, and other nonprofit-focused systems ever since. Not only do I do that professionally, but I also volunteer, and I'm on several boards and work with other nonprofits in a volunteer capacity as well. So I'm going to talk a little bit about that as we go. But I wanted to kind of make today a fun session, and so we're going to kind of dive right in and start talking about our topic today, which is financial malfeasance and crimes within the nonprofit sector, particularly fraud and embezzlement. And so I just want to cover some terms and a few facts that I think you'll find interesting and somewhat entertaining. And after doing so, we'll talk a little bit about then how Abila MIP and some of its associated products can help you address the risk of fraud and embezzlement within your organizations, both identify it but more importantly, prevent it. That's really the key. If you can prevent these types of malfeasance, then obviously it really is the best solution rather than identifying it after the fact. So just by way of definition, for financial crimes, fraud is basically the intentional perversion of the truth for purpose of inducing the reliance of another to obtain a valuable thing that belongs to him or her. And embezzlement is the appropriation of property which has been entrusted to you. So kind of a slight variation between the two, but basically those are the areas that we're focusing on today, and specifically as it relates to the nonprofit environment. This is a slide just talking about a few relevant headlines. Everyone I know is unfortunately all too familiar probably with cases in their own communities or their own industries. A few examples here. A financial director of the New York chapter of the American Red Cross was convicted of stealing over $274,000 over 4 years. The CFO of the HOW Foundation in Tulsa was sentenced to 15 months for a crime committed over 8 years, where the executive director wrote himself checks totaling over $1.35 million. And finally, a former CFO of an organization was also caught, convicted, and sentenced to 33 months imprisonment after embezzling more than nearly $350,000 over a 3-year period. So again, everyone, as I say, is all too familiar with these circumstances, and the point is that they do happen, and the idea is to, number one, recognize that and be aware of it, and then number two, figure out how to best address the issue and reduce the possibility of having a similar circumstance occur within your own organization. So this is kind of the fun part. We're going to talk a little bit, and I'll go through these pretty quickly, but just talk a little bit about perpetrators and the characteristics of perpetrators of fraud and embezzlement, again, particularly within the nonprofit organization. This information is drawn from the Association of Certified Fraud Examiners. They actually have a report that's quite detailed that I'd be happy to send to you. You can also find it out on their website, the acfe.org, Association of Certified Fraud Examiners website. And but that's where these statistics were drawn from. So let's jump in, and as I say, if you'd like a copy of the full report that supports these, this really is an interesting report. At the end, I'll actually pop over to it so you can see it. And I think several of you might be interested in getting a copy. We'd be happy to send that to you. So, man versus woman. So if you're together, you can answer these and make it into a game, or just think about it yourself. And as I say, we'll go through them pretty quickly, but I found them pretty interesting. Men are the greatest perpetrators, but not by much, 60% roughly to 40%. Men do tend to steal a little more, or actually considerably more. As we go through these slides, I think what you'll see is, the important thing to focus on is not only that males are perhaps more inclined or more enabled perhaps to perpetrate, but females do it plenty of the time as well. And I think that's kind of the overriding message. As we go through these, you'll see that we're going to point out some kind of characteristics and who is at greater risk. But the point I don't want to overlook is that as we look through these, you'll also notice that it crosses all boundaries, whether we're talking about positions, ages, education, etc. So men tend to generally perpetrate the crimes more frequently, and when they do so, they are involved with little larger sums of money. But again, women are certainly capable of perpetrating the events themselves. How about age groups? What would you think here? Well, in fact, in terms of the number of cases, the ages 41 to 50 are most inclined or have the most occurrences, and that's this number down here at the bottom, 34.6. So you can see under 26, 6.1%, 26 to 30, 8.8%, etc. However, as the perpetrators increase in age, the amount that they take advantage of increases significantly. So I guess as we get older, we get a little wiser, and we figure out that if we're going to do something bad, we might as well do it big. Go big or go home, right? Well, so as you can see, those over 60 only comprise 3%, but the amounts involved are substantial. So there's a couple points here I think that we could make or infer. One is that some of this probably goes to the opportunity, right? At younger points in your career, you probably don't have the opportunity or access to perpetrate crimes, maybe at all, and if so, not in substantial amounts. Although certainly these amounts are important and substantial. But as you advance through your career, you're entrusted with greater responsibility, greater sums of money involved perhaps, and so that might explain how this curve actually, you know, results from the conditions in the workplace and in people's career. And I think we'll see that in a couple more examples as well. So how about who steals most often and who steals the most money in terms of education? Well, again, there's a little bit of a correlation here where it's fairly even amongst the education components. So we've got high school grads at about a third, some college about 20%, bachelor's degrees about a third, and then postgraduate degree does drop off quite a bit. However, while there are fewer postgraduate perpetrators, they tend to perpetrate larger commitments of the fraud or embezzlement. So they're, you know, almost twice as much as is involved when the perpetrator has a postgraduate degree. And again, you might infer that that might be driven by the opportunity. So as you move up in the education chain, you're also probably better positions, more positions of greater responsibility are available, and that would give you the opportunity, or the perpetrators the opportunity, to have access to larger sums and be able to commit those occurrences of greater volume. So that was pretty interesting. What else do we have here? Position in terms of organization, an employee, a manager, or an owner or executive. The answer here is kind of broken up into two slides. The first is the frequency. So typically an employee is involved about 40%. At the manager level, it's about 40%. And then an owner or executive, again, less likely to perpetrate the crime at about 20%. However, when we talk about the amounts involved between an employee, a manager, and an owner or executive, that's when you see a considerable difference between the three categories. So the owner executive is typically involved in occurrences of up to $1 million or more, and that makes sense as well. So in terms of access and availability, and we're going to talk a little bit more about what creates the environment for these events to take place. If there's collusion versus one or more persons, how much more money would be involved or stolen? Maybe 2 times, 3 times, 4 times or more? What do you think? Well, it's actually 4 times or more. Now, while one person is involved in 60% of the occurrences, when 2 or more people are involved, which takes place in 40% of the occurrences, over 4 times as much is typically involved in terms of the amount. So again, just interesting facts about the occurrences and how those can perhaps point to ways to prevent some of the larger events from occurring. So, this would go to, for instance, separation of duties, right? Making sure that you don't have the opportunity for collusion, or try to prevent the opportunity for collusion for these types of events. What about criminal history? You think that someone with a background or a record might be more likely? Well, the facts don't point that out. Almost 90% of perpetrators have never been charged or convicted of previous crimes, and only about 8% had prior convictions, and only about 4% had been charged but not convicted. So again, you want to avoid generalizations when looking at the issues involved. As we speak to nonprofits in general, I think we tend to think that nonprofits would typically have less fraud. I think there's also often a perception that the staff are more committed to the mission. Obviously, The effects of stealing from a nonprofit would have perhaps be viewed as having more dramatic impacts on individuals, particularly those individuals in need, than stealing from a corporation. And so, you know, you might look at that and think, well, you know, nonprofits don't have much money. There's probably less fraud involved, and the staff of nonprofits and those involved with nonprofits are less greedy. Well, in terms of being poor, you can't really say nonprofits don't have money, and I think most of us in the industry are aware of that. It's a misconception. In 2011, several years ago, public charities reported over $1.6 trillion in total revenues. And of course, the sources are listed here as well. In addition to that, they reported almost $3 trillion in total assets. So plenty of you know, opportunity for assets and revenue to be identified and misappropriated. In terms of the frequency and the amount involved in these occurrences, whether it's a private, public, government, or nonprofit organization, well, this kind of that thought process does bear out. So nonprofits, I'm happy to say, are involved in the fewest number of these occurrences, at just about 14%, and the amount involved is generally less than our private and public counterparts. The governmental is more in line with nonprofit, but when it comes to fraud and embezzlement in private and public companies, the dollar values are larger and the occurrence it occurs more often. So that perception is accurate, and you know that speaks well for our industry. But again, it's important to note that it still happens. It happens in, you know, there's considerable numbers of occurrences involving considerable amounts of money. So certainly not guilt-free in that regard. All right. So how are frauds detected in the nonprofit industry? And this is one of the things that was interesting in the report that we could send you. Is very specific. These have kind of been lumped together on this graph, and this actually shows the difference between 2010 and 2014. The light green lines are here are 2010, and then the blue lines are 2014. So the greatest number of occurrences are detected by a tip, and that holds true throughout industries and organizations. So most often it's a tip that results in someone being uncovered. And the next level is by accident. Now, by accident, I would say, you know, has kind of a double meaning. For instance, is it accidental that if someone goes on vacation, a CFO goes on vacation, and someone else opens up the bank statement and sees that, you know, recognizes an inconsistency, and then, you know, reports it. Is that by accident, or is that actually, you know, a good practice? That practice being making sure that people do take their vacation time and do, you know, their performance and their practices, procedures, and job duties are reviewed at times by people other than themselves. So, you know, the by accident component here does have a component of design to it as well. But then certainly formal internal audits and formal internal controls are you know, a major factor in both the prevention and detection. And again, I would say that these areas are most important for prevention as opposed to uncovering the events, particularly internal controls, and we'll be talking a little bit more about that. And then the external audit and notification by police, you know, after the fact for whatever reason and whatever circumstances are a little less in nature. But that's kind of an interesting perspective, because I don't, there's certainly the culture of the organization is involved in the tip aspect, and that's a very important component. The culture of values and responsibilities that are shared within the organization also can impact that tip category. And so it's not, I guess, just by happenstance perhaps that those tips might be generated, but moreover by a culture in the organization that is, number one, aware, and number two, uncompromising in their treatment of those sorts of events. When these occurrences do happen, and this is an interesting component, is that about half the time they're not prosecuted. And I think this is particularly appropriate for nonprofits in terms of the fear of bad publicity. It's tough to opine on what is an appropriate level, or what are the appropriate characteristics of an event that needs to be publicized and prosecuted versus what might be handled internally from a discipline perspective. But it's certainly something to consider, and it's, I guess, if you think about the fact that about half the cases go unprosecuted, then looking at those slides that we just went through, you can double the number of occurrences and the number of dollars involved, because those instances just don't come to light. So fear of bad publicity is number one. Internal discipline, let's deal with it internally. A private settlement, maybe an agreement to pay back whatever funds were involved. Just don't want to go to the time and effort, perhaps from a legal perspective, don't feel it would be a successful prosecution. Handed civilly, or the perpetrator has just disappeared, are the other reasons for not prosecuting. So there's something called the 80, let's talk a little bit about, who might be a perpetrator. So there's something called the 10-80-10, or sometimes it's referred to as the 80-10-10 rule. And basically what it says is that 10% of people are honest and loyal and will not steal under any circumstances, even if there was a guarantee they would not get caught. Now, you'd certainly like to think it's more than that, but this is a generally accepted and consistent principle that actually only about 10% of people fall into that category. Now, again, in the nonprofit community, hopefully we attract more than our fair share of those folks, and so within our community, hope it's a larger percentage. But even if you double it, that's only 20%. So there's still plenty of potential offenders. 10% of people will steal given any opportunity with very little motive or need, but 80% of the population is generally going to be honest. However, if the need and the opportunity arise simultaneously, they would rationalize the opportunity and be tempted at least to perpetrate occurrence of fraud or embezzlement. And again, those numbers are backed up by the certified fraud examiner's research, and so it's kind of depressing to perceive it in that way, but those are in fact the facts. So what causes, there's a thing called the fraud triangle. So if we're talking about that 80% of the people that need to be given the appropriate circumstances, well, those circumstances consist of motive, rationalization, and opportunity. And if those three conditions come together, then that 80% that's on the fence may indeed perpetrate a crime. So how do you tell what an embezzler, who fits a profile? Well, again, this is, very much a generalization, but it's somewhat counterintuitive, right? They're going to be a model team member, as we saw from the previous slides, well educated, not not new to the community or probably the organization, perhaps in a position of authority. So it's not typically the generalization that you may think of. So they're believable, convincing, and intelligent. They don't have a past record. They can be of any age, gender, or nationality, and they might be one of the most tireless and members of your team, who contribute the most. As a matter of fact, one of the things that's consistent along the characteristics of the offenders is that they are controlling of their roles and secretive, perhaps, in their processes. So, for instance, someone who's doing the bank reconciliation that says, doesn't necessarily share the process, the backup, or the duties with anyone else, but simply produces a report that demonstrates or presents the bank account as reconciled with all the appropriate supporting schedules and so forth, but doesn't want anyone else to know how it's done, doesn't allow anyone else to participate, and that can be a red flag. While by all appearances and hopefully by fact, it's simply a very able and committed team member, it might also be a sign that there's too much control given to that particular position or professional, and that role may need to be modified a bit so that they don't have quite as much control. The process is one that's reviewed, other people do participate, and so forth. So it's as I say, these characteristics or profiles are somewhat counterintuitive, and that's important to keep in mind as you as you review your own organization. So what are some of the warning signs to look for? Well, of course, in terms of the motivations that we talked about, these can be fairly intuitive. Substance abuse issues, particular financial stresses may be caused by health problems or gambling problems or other lifestyle pressures, personal events individuals are going through, and so forth. There might also be internal motives, so a staff member feels underpaid or abused in some way. They don't think they're being treated fairly, or perhaps they're under a high volume of stress because of workloads or other environmental factors in the workplace. They may feel they've been overlooked for promotions. And so all these motives lead to rationalizations, right? So if they're under those pressures, they begin to think, well, it's really not that much. Somebody else got a bonus, so it's only fair that I'm able to get a little extra myself. They don't personalize the victim. They don't recognize the impact that their actions are really going to have, and so they depersonalize it. A lot of times the intent, and you hear this in a lot of cases, is, I did it once and I was going to pay it back, and then I wasn't able to, and I did it again, but I was going to pay it back, and then it just kind of snowballs out of control. So that can be part of the rationalization. And then, of course, if there's a culture within an organization of, geez, this is kind of what everyone does, we all abuse the system, whether it's free lunches or taking advantage of the company cars or the fleet, or taking home office supplies, or whatever the case may be. And of course, those are relatively small things, but that can escalate into larger events as well. So that's in terms of rationalization, how these things can happen. What are the causes for opportunity? So we've got the motive, the rationalization, and then the opportunity. And this is, while there are those other areas that you can have an impact on through corporate culture and being aware of the workplace environment, helping employees with EAP programs and so forth to help them deal with external pressures. As financial professionals, one of the places we can make the largest impact is by looking at the areas of opportunity. So, a lack of controls or a lack of formal processes, Obviously, you need the appropriate financial procedures and policies, and those need to be reviewed, documented, and published. And so, you know, without those, you really don't have a framework in which to in which to build that corporate culture of accountability. If the controls are poorly designed so that there isn't a separation of duties, or you know, an accountant is allowed to sign the check, or the accountant also does the bank reconciliation, or you know, that there are opportunities within the internal control system that need to be strengthened. A failure to follow internal controls that are in place. So, you know, bank recs that haven't been done for several months. What we see when we're working with clients a lot is processes taking place after the fact. So, for instance, we have, you know, a lot of organizations that use purchase orders, and in some cases they'll issue the purchase order after the invoice has been received, because we want that piece of paper to show that the process was followed, but it really didn't happen in this place, in this instance. So we'll just issue the purchase order and approve it post, you know, the service or products being received and the invoice actually being received for that. Well, that, you know, that's not the idea of having the purchasing process in place, so you're not following, or that may even be viewed as overriding the financial controls. As I mentioned, failure to get multiple bids, that was something that occurred just this month at a meeting that of an organization I'm on the board of, and there was an air conditioner that broke, and there was a $5,000 repair that had to take place, and so the executive director approved it. It was done, and then it came to the board for an approval of a budget revision. And at that time, the board recognized that an expenditure of that level should have gotten multiple bids, even though the executive director's position was, well, you know, the people that fixed it were the people that put it in. We have a maintenance contract with them, etc. Well, you know, the issue was not that he didn't do the right thing. It was that we violated our own policy, and so the discussion had to be had. You know, how are we going to reconcile this so that we can allow so that we don't hog tie or hamstring the process, but yet we're able to follow the process appropriately, so that we're not making these exceptions, because while one exception may be made in good faith and for all the right reasons, another may be made, you know, for not the right reasons, and so the best solution is just to not allow for those overriding of the financial controls by making sure the controls are appropriate and the policies and procedures are appropriate, documented, and then followed with very few exceptions. So just kind of an interesting topical situation that arose in my own experience just recently. So how does MIP fit into this picture of the controls? Well, one of the main ways that has been introduced recently are the alerts, and I'm not sure how many of you are using the alerts, but I wanted to go over them because our experience is most organizations have not implemented them as of yet. And so what the alerts do, and we're going to take a look at the system here in just a second and kind of drill down into it, but in a general sense, they allow users of MIP to take proactive steps in detecting fraudulent activities within their organization. So it just eases the process. And of course, by implementing the controls, you also create that environment of appropriate control and lessen the appearance of opportunity, right? So if these things are in place and staff know that these alerts are designed so that if a pay rate is changed, someone is automatically notified. If a check is modified, someone will automatically be alerted. So it not only helps detect and alert you to possible malfeasance. It creates an environment where it's not conducive to it. So that's an important, aspect of this. But so the alerts are designed to be configurable for monitoring key areas and then used to notify appropriate personnel. And that notification can be made by either an external email from outside the system or a notification to specific users within the MIP system. So you can, for instance, if a pay rate is changed in payroll, have a user within the system get a notification the next time they log into MIP, and that could be any appropriate user within MIP. You could also have it set up to send an email to a staff member who may or may not be an MIP user, right? Because that's just going to go through your general email system, and that needs to be set up within your email server, and there's a process for that that's a little more complex, and I think that's kind of what has deterred some of our clients from implementing this, is that it's not something that comes right out of the box. You have to connect the alerts through the server, and so there's a little technical aspect to it, at least on the front end, and that's one of the things I want to make clear here, is that if that's intimidating to you, please let us know. We can point you to the right resources, or even get involved in the implementation process so you can take advantage of this feature within MIP. So the third bullet point that I kind of passed over there, it makes notifications relevant to users' organizational requirements. So if you have payroll, there are payroll alerts. If you've got accounts payable or purchasing or budgeting, you can set up the alerts to do a variety of things based on your own organizational requirements. It's not necessarily the same for all users. So what are the available alerts? Well, so there's something in the system called a linked user. So as a system user, I can be linked to a variety of accounts, if you will, or master records. So for instance, if I'm an employee and I'm also an MIP user, my user ID can be attached to my employee record. So if I make a modification to my own employee record, that creates an alert. Okay. I could also be linked to a vendor. So if there's a particular type of vendor and you want to make sure that the users within MIP, if they modify something related to that vendor, then an alert is issued. All right, so that's the idea of a linked user. You could do the same thing with purchase orders to customers and so forth. So if you have an MIP user that, in terms of a system user, that you want to monitor in terms of their involvement with particular master records, employees, vendors, customers, you can do so. If a check is issued over a particular amount, that can create an alert. An employee pay rate is changed. We talked about that. Checks or vouchers are printed but not recorded. So if you're an MIP user, you know that you can, at the end of a check run, say the checks didn't print correctly, I need to print them again, or you can even just cancel out of the process as though those checks were never printed, because it's a posting process that actually records those, right? So if that takes place, someone is alerted. If checks or vouchers are printed but the unposted session is deleted, vendor name changes and vendor hold payment changes. So these are all, very kind of seemingly obvious areas, but this is how those occurrences of malfeasance take place. So it's great to be able to put these checks and balances in place. In order to, all that isn't available within within the MIP system as it exists. But with each release, they're adding more things. So for instance, within 2016, version 2016, 2016 of MIP, there was a new alert implemented, which alerts for check writing without a vendor ID. So if you are writing a check and don't select the vendor ID through Write Checks, the Write Checks process, or through a manual check process, the alert can be created. and sent out. So it's important to keep up to date so that the system incorporates all the latest alerts and fraud prevention components. So to create an alert, you configure it in MIP, and there's really a menu-driven process to do it. So as it says here, for each alert you create, you can choose who will receive it and how they should be notified, either as a menu display while logged into MIP or through an email. We kind of went over that. So you can also set up the system to alert a particular person, like a CFO, when a budget is overspent. So not all the alerts have to be particularly related to fraud control. They can also be just notifications. So like a notification to the AP clerk if the cash balance file's too low, and that could go to an executive director or whomever, right? Notification to the supervisor when someone cuts a check, that would be more to a linked user, that would be more fraud control than just administrative control, right? If pay rates are changed. But my point is that the alerts don't necessarily have to focus on, you know, internal controls, fraud controls, malfeasance. They can also be set up just to facilitate general business practices, like we need to know if our cash balance falls too low, or we need to know if we've overspent a budget. So they can be handy in a couple different methods. So here are some of the other areas we kind of touched on. If the organization, and someone prints a check and it's not recorded it, or it gets deleted. There are also system administration tools. So if someone's trying to log in and they fail 3 times, an alert can be created that at a particular workstation, you know, someone had 3 failed attempts to log in, and it will record, you know, what the user ID, if it's a existing user ID, so that, you know, maybe someone's password was compromised and someone else was trying to use it and, you know, attempted to but was unable to, you would be notified of that. So again, not necessarily specific financial controls, but good information. We're going to jump into the system here in a second and look at how that's all set up. So before we do so, just for your own benefit, you can go into the Abila Help menu, right? Everybody knows how to get to that, and go to the checklist, administrative checklists, and then there's an option, how do I set up alerts? And that's, you know, that would be the easiest way for you to kind of follow along and do that. Again, when you do that, you'll see that it's fairly technical and refers to some SMTP, you know, email connections on the server and so forth. So if you get into that and you're kind of a little confused, we're happy to help, or, you know, certainly share it with IT folks and so forth. I wanted to look at something real quick within the system. Bear with me just a moment. Okay, so I've popped over to MIP now, and I just want to look at a couple different things here. Close this window. So here we are in the main MIP system, right? If I go to organization, here's where I set up alerts, okay? So you should have access to this. Now, it is permission driven, so if you haven't given the appropriate the admin user would have access to it, but other users who have less than full access may or may not have the ability to access it. So you'd want to make sure that was enabled, permissions were enabled, and then you'd come here to set up alerts, and then you can create your own alerts, and you can name them because you can have as many different ones as you want. So you might have an alert for, you know, check over $500 that goes to one administrator, and check over $10,000 that goes to another one. So you can set up multiple rules and multiple alerts for different kinds of occurrences, different characteristics of transactions that you want to monitor. And then when you do that, you can also set up different levels of importance, either medium, high, or low, your typical active or inactive status, whether you want your notices to take place via email within the product or both, and then how this is actually configured. So what module is it related to? and what the event that creates the activity is related to. Okay? If it is a linked user, well, then you'll set up your user IDs to identify which users are involved in this process. So that's how that linked user works. You can then preview the note, create an email, which would include the specifics of the event, and then assign who that event is going to, the notification, who it's going to be triggered to. Now, if the email process is set up, you can also set up specific emails, and as I say, those emails don't necessarily have to be system users. So it's a pretty simple process. Once it's, the design is important, the implementation is important, but once it's set up, it works very well. The other thing I wanted to mention that we kind of touched on but didn't go into in a lot of detail was the audit trails, and we're going to talk about the auditor's guide that we have available for you in just a second. But the audit trails is something that a lot of users aren't aware of, and it literally tracks every transaction process within the system. So if I log into the system, that's recorded in the audit trail. Who I am, what system I logged in at, and when I did it. And then as I start to process transactions, add a vendor, do whatever, it's going to record that activity. So, it's always, we always joke that, if somebody says, I don't know how that happened, you can always go back and review. But moreover, it's nice to publicize this for a couple reasons. Number one, auditors love it. Right? They think if they're not aware of it, you need to make them aware of it because it will make them much more comfortable and confident in MIP as a system of audit. The other thing is users will recognize that their activities are being monitored, and it's good for them to know that as well, right? So that they recognize that things that they're doing in the system are leaving an audit trail, and so they may be less inclined to say, I don't know how that happened. So at any rate, that's a feature in the system that isn't necessarily widely used. And then there are things like account level security and more popular options that I think most users are aware of. Okay, I'm just going to pause that again, pop back to the presentation. So just about done here. Let's see, am I sharing? Okay, now I should be sharing, and we should be back to the screen that says, how do I set up alerts? So I hope everyone can see that. Another area that definitely merits mention is the requisition and purchasing process. So MIP has the e-requisition module. We also the micro requisition module that provides workflows so that if one requester processes a PO, it can go through an approval process so that it goes to their supervisor and then maybe the CFO. If it's over a certain dollar amount, it has to be approved, get an additional level of approval. If it involves computer purchases, it has to go to IT, and this is all done electronically through workflow. So it helps to avoid that process that I mentioned before, which is, oh gosh, we forgot to do a purchase order for this. Let's fill one out now so we can attach it to the invoice so that everything's in place. Kind of defeats the whole purpose, right? So making the purchasing process electronic is a good way to facilitate these controls as well, and other workflow processes. So, if you're a payroll user, the timesheets and employee self-service types of options are available as well. So just thought that was worth mentioning. In terms of the auditor's guide, some of these things I've been talking about, the audit trail that's left, system security, we have this document, the MIP Auditor's Guide, available for you. And in it, some of the things it talks about are database and user security, chart of account structure, audit trail, transaction review, cash management, property and equipment, etc. And it's a great document not only for you to review and just make sure you're kind of aware of everything that's available to you in the system, but it's a great document to share with the auditors to say, okay, this is how MIP actually operates, because not all auditors are as familiar with MIP as they are maybe with QuickBooks, right? So they may not understand all the additional controls that are built into MIP that make it a much better system of record than QuickBooks it will ever be in terms of audit trails. So it's important that they know that, and it can make your job easier. It can make their job easier, which can certainly make your job easier, maybe save some time and money in the process, okay? The other thing I did want to mention before I open it up for questions is I did want to point out this document, which is that report that I referred to earlier and that we pulled the statistics from. So it's the 2014 Global Fraud Study from the from the Association of Certified Examiners. And this is some of the content. So it talks about how fraud is committed, some of the recent cases, perpetrator characteristics, which was a lot of what we kind of went through, and so forth, methodology. So it talks about, how to structure an organization to reduce the opportunity for those fraudulent activities to take place. So this, in administrative controls, along with internal controls and then system controls, can really build an environment where you reduce the opportunity for these acts of malfeasance to take place, and hopefully don't have to deal with the discussion of, are we going to prosecute or are we going to publicize this after it's already happened, right? So that's the ideal situation to find yourself in, not having to deal with those situations, but yet having a high level of confidence that if something were to occur, you would be able to identify it. So I hope you found that helpful. Do you have any questions? Teresa, we could take folks off mute, or you can type questions into the chat box. Again, if you'd like these documents, you can, Teresa will be doing some follow-up. You can simply ask her, and if you'd like some help implementing any of this, likewise, just ask Teresa, and we'll be happy to help you out.
Yeah, I've unmuted everyone, so if you have questions, let us know.
Okay, great. Thank you, Teresa.
Yep.
Do we have any questions? No?
I had just sent one. How do we obtain a copy of the MIP Auditor's Guide, and what is the cost?
Oh, gosh, I should have mentioned the cost implicate. There's no cost. All you have, and that's true for both of the documents that I referred to. Yeah, and Teresa would be happy to send that to you. And they're both electronic documents.
Great, thank you.
Yeah, what I'll do is just forward it to everyone. That way everyone will have it if you need it. Okay?
Thank you.
Mm-hmm.
Anything else? I hope everyone was at least got a little pearl of wisdom out of this, a little something they didn't know before you joined us at the top of the hour. If so, I think I hope that makes it worthwhile. It certainly makes me feel like it was a success, as that's what we always try to do during these online user groups and sessions that we do here at First Choice. So if there aren't any other questions at the moment, we can sign off unless you have anything else, Teresa.
No, I think we're good to go. And this is recorded. If anyone else in your organization would like to get the recording, let me know.
And we could make the slide deck available to you as well if you're interested in that. So, well, thanks everyone for being here. Hope you have a great rest of your day, and please let us know if there's anything we can do to help you out.